What's going on, motherfuckers? Throwing together an update video for the weekend. First of all, everyone who stopped by the stream on Thursday, thank you guys. We had a great time. We talked about a lot. Primarily, the focus of that stream was the bullishness of the stock market, because this is not just a meme stock thing. I mentioned, in all of my past update videos, and we were talking about it in the live. Thank you to YouTube for taking down my live stream 2 minutes after I concluded the stream. But we were talking about the bullishness of the market because this is a market-wide thing. This is not just only applying to the meme stocks. This is everything. Everything is bullish right now. So the current state, the situation of the market, there is opportunity everywhere. Now, with that being said, in my opinion, and like I said, I'm not a financial advisor. Nothing I ever say is financial advice, but you could pretty much close your eyes and throw a dart at a ticker right now and buy it. That is the current state of the market. With that being said, the meme stocks specifically have very specific bull phases of their macro, which I've mentioned multiple times is a vertical line, which is what we saw in January on AMC and GameStop, a vertical line directly to the top. And that's pretty much the reason we're here, the squeeze. That is the whole situation with the market, with the meme stocks at least, why we're here, why most of us are here, invested in this play. But with that being said, let's get into the video, and we're going to talk about S&P 500 first. And there are two lines of thought here with not only AMC, GameStop, but S&P 500 and everything else. And the two lines of thought are January always has been, or, and I know December is almost over, there's 2 weeks left in December, but there is still a case for squeezing in December. So we'll start with S&P 500, which had an absolutely fire week, breaking the resistance at 460, the macro resistance at 460, this green horizontal line. Very strong resistance here, which I mentioned was a big deal. Breaking 460 was a very big deal for S&P 500. It's confirmation of a bullish market. And I said in my earliest video last week, I think, or the video I made Friday, you could potentially expect to see 470 on SPY this week. And that is exactly what happened. We saw a break of 460 and continuation to the upside all the way up to this 474 resistance, which is pretty much the last resistance to break through here. I believe the local high was 473.73. So we saw that. We poked our head on that resistance. We got the doji I was looking for. And then Friday, another pullback candle. This looks very, very good. This local high here, 473.73, $6 away from all-time highs on S&P 500. So this looks very good. Now there's not two, but a few ways that this can play out going forward. We could potentially see some kind of symmetrical pullback because this top here is pretty much the same as this one. And, I retired the symmetry chart, but we could potentially pull back to 460 here to retest the macro breakout, which is completely fine. That has to happen. It will happen. It's just a matter of when it will happen. I would prefer we would do this sooner rather than later. I would prefer we get the retest of 460 out of the way, and then we can just continue to the upside from there to all-time highs and past that. So I would prefer to see that. But potentially what happens here is we get some consolidation here before breaking this range to the upside and continuing to all-time highs and further before pulling back to 460. As of right now, I'm kind of leaning on the side that we are going to pull back to test the macro break at 460. Would it surprise me if we just continued higher here? Absolutely not. Like I mentioned, the market is very, very bullish. SPY is going to continue climbing here, whether it tests 460 or not next week. We are looking for all-time highs. That is the next stop on S&P 500. And I mentioned multiple times, and this goes back to the line of thought of January always has been. Another good example is SPY seeing all-time highs in January 2022 and once again lining up for all-time highs in January 2024. That is not to say that this cannot happen in December, as all-time highs previously on S&P 500 were also in December. This December all-time highs right here, and then the January all-time highs followed that. So that is pretty much it for SPY. Now, Dow Jones formed a new all-time high last week as well. So we have S&P 500, which is $6 away from all-time highs. NASDAQ is pretty much in the same spot as S&P 500. Dow Jones saw a new all-time high on Thursday. Precious metals, gold and silver. Gold recently saw a new all-time high. I believe that was 2 weeks ago or last week. Silver is in the process of breaking out of its macro. Blue chips are either at all-time highs as of right now or very, very close to seeing it, creeping up on all-time highs. We are in an absolute fucking bull market. And like I said, this applies to everything, not just the meme stocks. It applies to the market in its entirety, and potentially even crypto as well. Crypto has been on a run lately. Currently, Bitcoin is consolidating 40K. There's two lines of thought for that as well, where potentially you could expect a pullback. I would not rule out crypto continuing higher and up to all-time highs while everything else is going on with the market. So that is pretty much it for SPY. Now let's talk about AMC, and we're going to start with the macro perspective as always. Rather than going through the macro here, I'm going to go through it on the downtrend. I find it's easier to digest and see the macro fractal playing out when you break it into pieces. So in other words, you're just looking at the bull phases compared to each other or the bear phases compared to each other. AMC, believe it or not, is a very repetitive macro, and this is not the only one. There's plenty of repetitive macros across the market, but very similar bull phase that you see here, very similar levels even. Obviously, the current macro had higher price targets, and the next macro will have higher price targets than that, but your bull phase of AMC, your bear phase of AMC, your reset into a bull phase, and then a whole entire bear phase once again. And the bear phase pretty much takes you all the way down to zero. Not actually to zero, but right above it. In 2021, 2020, 2021, we saw the same thing in the flat portion here, taking us all the way down right above zero, and that's the current situation now. The people talking about, we could potentially go to zero, $4, this, that, they were saying the same thing back here. Fractals are fractaling is pretty much the point here. Now, like I previously said, I think it's a little bit easier to digest the patterns of macros when you break them into pieces. So that's what I've been doing lately, is breaking the macro into pieces and just pretty much hiding all of the other noise from the chart. So rather than looking at the chart in its entirety, we are just looking at specifically the bear phases of AMC. So the previous macro bear phase versus the current macro bear phase on the right now. So I've mentioned this multiple times, where you start with your macro break in this blue box here. That is the gap down from the top. So when the bull phase concludes, you get this macro break gap down, followed by this little pattern of sideways consolidation before you actually get into the downtrend. Now, when you do get into the downtrend, you find your first bottom, consolidate a little bit, chop, and then you work your way back up. And that first rejection point that you find is your macro resistance in the bear phase. So in the previous macro, here you go, here's your first bottom, climb back up, you reject here, you find your macro resistance line. Same thing over here, consolidate back up to the trend, you find your macro resistance, you reject there. There you go. Now you have your macro resistance trend coming down again for your second bottom, and then back up for your second touch on the trend on both sides. So second bottom, second touch on the trend, rejecting again. And then from that point, you do not touch your macro resistance again until you get to the flat portion where you have your tri-peak move here, which it doesn't touch the trend, but it pokes above the 200 EMA. And that's another thing. The 200 EMA it's identical. The crosses of it, the intersections of the 200 EMA for both macros are identical. So you find the 200 EMA in the tri-peak. That's when you're starting the flat portion. Then you get the W move, which is the fake out. This breaks you outside of the resistance. This was that move in July. Breaking you outside of the resistance, this is a fake out. So now we have our third touch on our macro resistance. The first two are rejections, clean rejections off. The third touch on your macro resistance is a fake out. You break through it, but then pull back inside for your second and third bottom, your third bottom being the all-time low landmark. I mentioned this is January 15th repeating, breaking to the downside, lower highs and lower lows all the way down to your all-time low landmark, which is also your reversal point. And that's where we are now, our third bottom all-time low. Our second bottom and the third bottom is slightly lower than the second, and we have been chopping down here, pretty much trading sideways for almost a month now. It looks like we're ready to move up here. So again, really quick, your first two rejection points, your first two touches on the macro resistance are rejections, 1 and 2. Your third touch on the resistance is your fake out, and your fourth touch is the breakout and the squeeze, which is a vertical line. Now, just the fact alone that we broke this macro resistance here in 2021 and we saw a vertical line, you can bet your ass that when we break this trend line here, it's going to be a vertical line. Now, I mentioned multiple times the resistances are the same, the touch point wise, but they're not the same in the sense that the current macro resistance we have halted off each time we've touched it. 1, 2, and 3 have halted off of this trend as compared to the previous macro, 1, 2, 3. There was not a single halt on this trend. And with that being said, the final thing here being that the flat portion is roughly 1 year in length. The previous 2020 to 2021 and the current 2023 to 2024. So now we're going to zoom in on the flat portion itself. And again, all the noise is removed here. I do want to mention one thing before I go through this, is that I have slightly adjusted the macro resistance back to where I previously had it. I originally had the line like this running over these 2 wicks here. I moved it down a little bit. I'm just going to leave it like this until I'm just going to leave it like this, and if we break it early, so be it. But this is the most conservative way you can possibly draw this trend line. So I'm just going to leave it as is like this. And if we break it earlier, so be it. And I'll get into the dates with that when we're meeting it. But really quickly, going over the flat portion, dropping down again. It's very repetitive stuff here. Choppy, gap up, 3 peaks, poking above the 200 EMA in yellow. Dropping down, choppy, gap up, 3 peaks, poking above the 200 EMA. The W fake out move, W fake out move. Breaking over the macro resistance and then pulling down for your second and third bottom. Your second and third bottom. And again, the third bottom is slightly lower than the second, which is the exact same in the current cycle, and that is your all-time low landmark and your reversal point. And then obviously 0 is right underneath you. So that is the flat portion. Now let's get into the halt line itself. Now, I mentioned that I adjusted the trend line back to the original state that I had it, which was rejecting these 2 wicks here, falling down in August from this the fake out that we saw in July. Now, I did have it running down these wicks right here. The second time I moved it, I'm just going to leave it like this. I'm just going to leave it in the most conservative possible way that you can draw this line, which is actually by hitting these 2 wicks, you're pulling it slightly off of the August wicks here, but so be it. It's still the same. We're halting off of this trend here. Halting in March, halting in August, halting in July, the fake out move, and then just running it over these 2 wicks all the way down now. This is also something that I mentioned in my live, where if you're just looking at the chart here, look at the range on these daily candles. Big moves, big swings up and down here, all the way through this. And through all of this time, the volume was very, very low. And then coming to where we are now, our second and third bottom, the candles here, the range on these candles is so tight, it's so coiled. We're just completely flatlined here. Like I said, look at the range on these candles here, just completely flat compared to the rest of the macro. And this is pretty much on all-time high volume as well, which says a lot in my opinion. So that's it. That's the halt line. That's our macro resistance, a very important trend line. Now, let's zoom in a little bit on it and talk about some dates. So, first of all, we've pretty much quadruple bottom now at 650. So, this looks very bottomy. It's time to move up here, whether it's a slow climb or whether we just gap up on Monday, which I wouldn't even rule it out. But we're just drawing a horizontal line here at 650, which is the bottom, and we have our macro resistance running down here. Now, if we just went completely flat at 650 all the way to this point, which is not going to happen, it wouldn't make sense. The chart has to make sense. And I mentioned before this even played out that this move here would be symmetrical, where you have your first cup, here's the tri-peak, and then your third bottom all-time low now. This has to start curling up to make this a symmetrical move. It has to make sense is pretty much the point here. We're not just going to go dead flat here at 650 all the way until we meet this trend. Even if we did that, in a worst case, in a very unlikely scenario, going dead flat here, we would be meeting our macro resistance on January 5th, which is roughly 2 weeks away. It's right there. But like I said, it has to make sense. So more than likely, we're going to start the uptrend here to finish off the symmetrical, the movement, the symmetry of this. We will be uptrending here, and we're going to be meeting this trend line sooner than January 5th. And like I said, we broke our macro resistance in 2021, and it was just straight line volatility to the upside, vertical line. We're 100% expecting that when we break this trend line, especially since this is our halt line as well. We weren't even being halted off of this trend in the previous macro, and when we broke it, it was straight line volatility. Now we've already seen what's behind this trend line in July, straight line volatility. This is our macro halt line. So pretty much the point that I'm getting at here is even if we went dead flat to January 5th, that is going to poke us outside of the macro resistance, and we're expecting straight line volatility when we reach that. And in the same breath, running the macro resistance all the way down, we're intersecting zero in January as well, mid to late January. So this is a now or never type thing. So that's pretty much that. Now I want to briefly touch on the Opex dates again. Now, as of right now, this is just a theory, but the thing about it is it's a theory, but it's also an 100% hit rate. And what I mean by that, and this is 2021 Opex dates here. So January 15th, the January 15th, 2021, a very important date, was Opex. So you have Friday, January 15th, Opex in 2021. You have your weekend, Saturday, Sunday. There was a holiday on Monday, the 18th. And then 7 trading days later, 1, 2, 3, 4, weekend, 5, 6, 7 trading days later, we peaked. This is a peak target. 7 trading days post Opex, January 27th was the peak. Now in June, the same exact thing happened. We had our Opex date in May. Friday, May 21st here, Opex, weekend, 1, 2, 3, 4, 5, weekend, holiday on Monday, 6 and 7, June 2nd, we peaked. So for both scenarios, both squeezes, January and June, we peaked 7 trading days post Opex. So yes, this is a theory, but it's also an 100% hit rate. And in the same breath, and this is just my opinion, the odds of that happening are astronomical, where you have both of your peaks landing exactly 7 trading days post Opex date, with a holiday in between, so both of them landing on a Wednesday. Now, let's talk about the current situation, and I'm only going to talk about the next two OPEX peak targets. So we'll start with the current one, December, which is what we're in, December 2023. This past Friday, December 15th, was Opex. So, and I'm just pointing this out. We now have a weekend. We have all of next week, 1, 2, 3, 4, 5 hour weekend. We have Christmas, the 25th, 6 and 7 trading days, December 27th, potentially a peak target for AMC. And then the January, and again, that's landing on a Wednesday because there's a holiday in between here. The January 2024 target, January 19th, 2024 is OPEX. There's no holidays here, so 7 trading days is landing on January 30th, which is a Tuesday. Now, I want to look at the charts now side by side because this looks really good. So we have the final iteration, the W with the tri-peak of the previous macro on the left and the exact same thing on the right for the current macro now. And I have the 20 and the 50 EMA here, and this is just how I've been tracking it. So you have this little cup here on the side in blue, which would be the equivalent of this. And then you get your second bottom that you see here, your tri-peak, and then your third bottom all-time low. Again, this is your reversal point. And then from that point, you form a very slow, choppy uptrend until you get to January 15th, 2021, which was that OPEX date, and it was a Friday. Now, we've done the same thing here, our third bottom all-time low, a very slow, choppy uptrend here. And this Friday was OPEX, and at the same time, this is the point at which you're battling to claim the 20 EMA on the daily. Previous cycle, same story as the current, battling the 20 EMA. That Friday, you actually closed below the 20 EMA on OPEX, and the following trading day, you gap up, which actually makes this a very symmetrical move. It's a W, you have a cup here, the tri-peak is the middle of the move, there's the right leg of the W, and there's the right cup, the symmetrical equivalent straight across here. So it's potentially, we could gap up on Monday. I'm expecting upside regardless. We have now quadruple bottomed 650 here. It's time to move up here, whether it's a slow, choppy uptrend or we just gap up Monday and we actually do get this iteration. Now, if we do gap up Monday, that, December 27th looks pretty good. So I'm just pointing this out. It looks really good is pretty much the point here. And again, this macro resistance line is pretty much a vertical line and is dropping 50 cents every single day that goes by. And every single day that goes by, we get one candle closer to it moving to the right. So that's it for that. Now, really quickly, indicators. I'm not going to go too crazy with this. The weekly chart on AMC, RSI is still oversold. It's still sitting under 30. 29.7, some shit like that. It's been oversold for 6 months now. The RSI on the weekly, it has to come back up towards overbought. It has to. And when it does, we will be squeezing. OBV cooling off a little bit, still sitting above the macro, the descending resistance. We broke out of it, tested, new all-time high, and we're just sitting right on top right now. Another red week, pretty much sideways. I mean, the past 4 weeks here, it's just been a quadruple bottom at 650 here, back-to-back-to-back dojis. This looks very bottomy. And again, the volume is already sitting at all-time high levels. Looks great. And the final thing, and I mentioned this multiple times, but I'll just really quickly mention it again. The Fibonacci spiral, starting at IPO and taking your all-time low in 2021, your all-time high in June 2021, starting at IPO. And the golden ratio, the Fibonacci spiral, the golden ratio, 1.618. I mentioned multiple times, it controls everything. I gave a bunch of examples: DNA, hurricanes, the galaxy, the spiral shape of the galaxy, plants, seeds, trees, you name it. The golden ratio is respected all throughout all of the physical aspects of life. The golden ratio is respected. Now, we were talking about this yesterday in Discord, actually. Along with the physical aspects of life, Now, we could also talk about the intangibles or the abstract human behavior, for example. So, starting the spiral at IPO, very low volume, by the way, through all this time here until we met the spiral. And it's actually kind of funny. I mentioned this yesterday in Discord. This first candle here on the spiral, the first touch point, this candle was the week that the CDC announced the outbreak of COVID. Now, say what you want, think what you want about COVID, but that shit upended the world as we knew it. Changed a lot. A macro break, if you will. At the same time, touching the Fibonacci spiral, the golden ratio resistance, a macro break there. And then again, the resistance up top, it's also our macro halt line, descending volume through all of that selling, a breakout and a retest on the spiral on very high volume now. And around this time, a bunch of shit happening. Israel, Gaza, U.S. airstrike on Syria, tensions in the Middle East. Pretty much the point here is that this next macro break that we're about to see in the market is going to be accompanied with a macro break in the real world, a big event. And it's already shaping up. I mean, it's pretty much undeniable. And, obviously, I'm not like the news guy or anything, mainstream media. It's a propaganda fear machine to control the masses. But even with that, there's a lot of crazy shit going on in the world right now. So it's very interesting. It's pretty much the point here that the golden ratio, this Fibonacci spiral, is respected in all physical aspects of life. The spiral shape of the galaxy, human DNA, weather patterns, hurricanes, nature, plants. It's also respected in the stock market. And arguably, the intangibles, human behavior, virus outbreaks, wars, it's very interesting, to say the least. But the main point here is we're retesting a breakout of the golden ratio on pretty much all-time high volume. Is pretty much the point here. Our second and third bottom is what you're looking at. So this looks great. So that's it for the video. I would say next week I would expect upside for AMC. I think the bottom here is you spent enough time chopping down here sideways. Like I said, this chart has to make sense. So we need to see an uptrend here to complete the symmetry. And a gap up would be the ideal situation for Monday. That would be amazing if we saw a gap up on Monday and played out this iteration. If we don't, and it's just a slow, choppy uptrend, so be it. It'll just be an uptrend until we meet the macro resistance. And like I said, if we were dead flat here, we're meeting it January 5th. If we're just dead flat at 650, which we're not going to be, we have to start uptrending here into it. So more than likely, we will be meeting this trend line in December. And if we break it in December, again, we are expecting straight line volatility to the upside like we saw in the previous macro. We should definitely see that again, as this is our macro halt line. And we have much more ground to cover, as our price target is the 3.618 of $1,400. So with that being said, that is everything for the video. The market is very bullish. It is not just the meme stocks. It is everything else. S&P 500 on its way to all-time highs, $6 away. Dow Jones is already there. NASDAQ right behind it. Crypto's booming. Altcoins booming. Blue chips booming. Everything looks good. I'm not a financial advisor, but throw a fucking dart is pretty much the point. So with that being said, enjoy the rest of your weekend, and I will catch you guys with some update videos next week.